Hello traders, welcome to the daily analytical report with Alpari. My name is Tomasz Wiśniewski and I'm a chief analyst in Alpari Research and Analysis. So we start the last week before Christmas. Usually that week is not very busy, not very big in terms of the market movements. Also the calendar is rather empty, especially after Bank of Japan is already off the table. Also Janet Yellen's speech on Monday already happened. So the last 4 days of trading should be more technical, less volatile. So many traders probably won't even trade this week because, as we know, retail traders, they do love volatility. When there's low volatility, they usually do not trade. First, let's take a look on the calendar. What should we expect? As you can see, Bank of Japan left interest rate unchanged. Also, what do we have here? As for today, as you can see, we're done with the market events. We had PPI from Germany, so the biggest economy in the Eurozone, which came a little bit better than expected. On Wednesday, data from New Zealand. Also important data for oil, which is actually now advancing higher. On Thursday, as you can see, GDP day for New Zealand and as you can see, for New Zealand and for United States. Also durable good orders. So Thursday, we should see some volatility, but I think that's the only day this week where we're gonna see something. So let's see the charts. I will start with oil, which we made a comment, we made an analysis for FX Empire on oil. It was done yesterday when we were advising advising. We cannot advise anything, right? On those analyses, it's against the law. What we can do is to describe the situation, and for example, we can tell who has the higher odds of success, and we wrote there that long positions seems more probable, with a higher potential of profit. Why is that? Correction equality movement, also a flag, which is a trend continuation pattern. Trend is bullish. And why is that? Because we do have higher highs and higher lows. Also, the end of the flag was inverted head and shoulder formation. Left shoulder, head, right shoulder. This black line is a neckline. So in the same time, we broke upper line of the flag, which triggers the buy signal. Neckline, which triggers the buy signal, and 23.6 Fibonacci level, which is not as which is not a buy signal itself, but is an additional profit to this one. So all those three gave buy signal, and that is why the price went higher. We can see a bit of a retracement yesterday, but today we are coming back to this to the main trend on oil. As you know, I'm bearish on oil, but in the long term. And as a trader, what you should do, you should never ignore what the price is telling you. Okay, the price is telling me right now that they want to go up. So even if I'm bearish on oil and I think the price should decline, I should take into the consideration the current signals on the market, and current signals on the market are telling me that the price should go higher. So it's not up to me, I'm not an economist, I'm a trader. What traders should do is to trade. Traders should read the market and place good orders. If you're an economist, you can think about something that should be stronger or weaker, that something should go up or down, but you're a trader and you should trade. The main aim for a trader is to trade, and you can go both ways. So even if you think that something will go up or down, you cannot ignore the signals which you're getting from the price. And now I'm getting signals that the oil should go up. Also, let me show you DAX. Indexes are advancing higher. As you can see, we have a ascending triangle here. Ascending triangles usually are a trend continuation pattern, uptrend continuation pattern. So what we should see here is a bullish breakout. As you can see, stock traders do not even look at what happened yesterday in Berlin. Well, some may say it's sad, some may say it's not, but it's just how market works. As you can see from the current price in DAX, traders are not moved by the situation in Europe right now. From this technical pattern, we had a pennant here. It's not a head and shoulder formation. It could be, but we didn't have a breakout, so it was a pennant, wedge, trend continuation, now ascending triangle, and ascending triangle in theory should result in an upswing. Okay, now let's move to the forex market. Let me show you currencies. Euro dollar was advancing lower, then had a correction, and now it's advancing lower again. Well, the closest support is our lows from 15th of December. If we would have a breakout, well, it's up to the long-term chart where we should get the next support, maybe here. Okay, maybe here. Why is that? Because we have highs from July 2002 and November 2002. So here is the closest support. From now it's 250 pips. So as you can see, it's not very optimistic for buyers as long as the price stays below 1.0520. The sentiment is definitely bearish. Cable, very interesting situation. Yesterday we wrote an analysis about cable, I think for investing.com, where we are telling that the price should go lower. Why is that? Well, Brexit, symmetric triangle, trend continuation pattern, a breakout, flag, trend continuation pattern. We broke the horizontal support on 1.2550, then after that a lower line of the flag, broken, as you know, broken support becomes a resistance. So we broke the support, the price was coming back to this area, we had a bounce, so resistance worked, and now the price is advancing lower. Very technical movement, very nice to look at. The next support is actually now. Why is that? Because this is a top from 19th of October, also 2nd of November, and also support from 18th and 21st of November. So we may experience a little bounce here, but also a strong breakout. The next support is here. I would say that we should get there anytime soon, maybe if not this week, maybe the next week, but generally speaking, the gravity should attract this level. How many pips do we have to this? 250 pips. So still significant movement for many traders. The next instrument I would like to show you is Australian dollar to American dollar. You know this because we are not advising again, but describing the situation as strongly bearish. After we bounce from this support, from this resistance here, along with the upper line of the wedge, we had a bearish movement. We broke the lower line of the wedge. We broke the horizontal support here on 0.7420. The price is declining. We were thinking that we should see a bounce here. Why is that? Because that was a support. You cannot say no, it was a support in June, as you can see in the middle of the June and in the second part at the end of the June. Also it was in the second half of November, but it was just a potential support. The price didn't react on it and broke it straight away. Then you have a test, as one of the principles of the price action says, that broken support becomes a resistance. So we had a test. Test was optimistic for sellers and the price is advancing lower. As you can see, each day we have lower lows. On a daily chart, how does it look like? 1, 2, 3, 4, 5 bearish days in a row. Now the closest support is here, 0.7150. Very important support. At least in theory, we do have 70 pips to this one. Most probably what we will see is a decline, then a bit of correction, then maybe a breakout. That's how it should work. To this, I'm not sure. We still have to see, wait and see. But this decline to this support is more or less certain, but obviously there are no sure bets on the market. You cannot say that something is certain, but you can say that something will happen with high probability, and that's this thing. American dollar to Swiss franc, very interesting. Do you remember a situation from November? Right? We had many corrections. This one, and this one. All of them were 60-70 pips. Right? Now we're having twice as big corrections, but also they are more or less the same. So this one, 130 pips, then an upswing. 130 pips, then an upswing. At least that one. Then 130 pips, then an upswing, and now 123 pips and an upswing. We missed like 10 pips here. I was thinking that the price can get there and bounce from this horizontal support, but as you can see, they bounced quicker here. But still the upswing is significant, 80 pips. Also, this is a flag. Flag, as you know, is a trend continuation pattern. So along with the correction equality movement and a bounce from a horizontal support, we got a bullish breakout of the flag, and the price is advancing higher. Trend is positive because the price is making higher highs and higher lows, So everything looks good for the buyers here. American dollar to Canadian dollar here. Sentiment is still bullish in the midterm, bearish in the long term, as we are still in the flag. But as long as we are closed between horizontal resistance here on 50% Fibonacci and the top of this correction, and between the lower line of the flag, we can say that the sentiment here is rather neutral, not positive, not negative. Gold, flag, decline, flag, decline, flag, decline, flag, decline. Well, this can be wedge, right? This can be wedge as well, but it doesn't really matter because they are the same in terms of the principle involved here. Breakout, decline, pennant, decline. Now what we are having, it's not matter if it's a pennant or if it's a flag. Both are trend continuations pattern, and in downtrend continuations pattern, all it counts is a lower line, and because you just wait for the breakout and go with the trend. So we got a breakout, the price is advancing lower, dollar is stronger, so the price of gold is advancing lower, and we are heading to very important local support on $1,100 per ounce. And we can see if we will see an upswing there or not. Euro to Canadian dollar. We are still waiting for this downswing, which is very probable, and we should get that anytime soon. And because we have a downswing, this can be considered as a trend continuation pattern. What trend continuation pattern? Let me say it's a pennant. Again, it doesn't really matter. We should see a downswing after this lower blue line will be broken. Euro to British pound. Well, situation here is also not clear. I would say it's neutral as well. What we are having here is a flat correction. And as long as we stay above the lower line connecting recent higher lows and below the upper line connecting recent lower highs, the sentiment here is neutral. We are above an important long-term support. So if this lower line will be broken and this horizontal support will be broken, we can expect a stronger decline here. But so far so good for the buyers, they keep the price above this level, but all they need for a stronger upswing is a breakout of this line. Now silver is not having a good day. As you can see, we are breaking an important horizontal support. Why important? Because it was a resistance in February, in March, it was a support in June, and now it was a support for some time in December, but now it gets broken, which sends the price of the silver lower. And well, the situation was bearish for a long time, but now it got even worse. So new bears are coming to the market, and again, look, that was support. We had a breakout, we had a comeback test of this level as the closest resistance, and then a bearish continuation. So not good situation at all. Australian dollar to Canadian dollar. Finally, we have something. We have a breakout of this important horizontal support here, along with 61.8 Fibonacci level. So we can say that head and shoulder works. Left shoulder, head, right shoulder, breakout of a neckline, and the price is advancing lower. high chance, there is a high chance that the price will touch this trend line here. For this, we do have 200 pips. You can see that this pair is more or less trending quite strongly, as you can see here: uptrend, downtrend, uptrend, and most probably strong downtrend here. Let me check this trend. Well, I wouldn't be surprised if we would get somewhere here, touch the trend line, and then go back again. But again, at least 150 pips or 180, something like that. New Zealand dollar to Swiss franc. We were expecting here an upswing, but it didn't happen. So you cannot use this carry trading option here, and the price is advancing much lower. Euro to Australian dollar. As you know, we had a position here on our live trading account. Luckily it was closed on break-even point because we opened that somewhere here. When the price broke this support, we moved our stop loss order on break-even point, and we protected our position. The price came back, which shows that our decision to protect our position was good. And now we're back in this triangle, in this rectangle. This breakout is a false breakout. That is why we have a strong reaction here, as almost always after the false breakouts. We have 300 pips upswing. As long as we are in this rectangle, the sentiment is neutral, but kind of bearish in the same time, because rectangle is a trend continuation pattern and trend is negative. But with a proper decision, with a final decision, you should wait for either come back above the support, which should above this resistance, which should trigger a buy signal, or below this support, which should trigger a sell signal. Look how Bank of Japan influenced yen got weaker. What we are having here is a correction, then an upswing. Well, yes, we can say it's a kind of a similar situation to I think it was cable. No, it was. Yes, American dollar to Swiss franc. No, WTI, I'm sorry. You remember on WTI we had a flag. Let me show you that again. We had a flag, inverted head and shoulder formation, then a breakout, then continuation. How does the situation look here? Also a flag, inverted head and shoulder formation. Here left shoulder, maybe let me change the color of the neckline. Here left shoulder, head, right shoulder, breakout of a neckline, breakout of the flag formation, and now the price is advancing higher. Also, I'm very curious about those corrections. Let's check that. No. Well, maybe this one. So this correction is 210 pips. This one 200. This one 250. So maybe not Those correction movements are not so beautiful, but still you could see a potential here. Now the price advancing higher. The sentiment here is very bullish as long as we stay above this gray support here, which is very important support in the long term. As you can see, it supports the price since December 2014. Helped once, twice, third time, fourth time. After the breakout, it was tested, resulted in a downswing, but then the price advanced higher. And we should approach that trend line soon. 110 pips. What is the trend line? It's this one, connecting long-term lower highs. This is the place where we can expect bearish correction here, but so far still it looks positive for buyers. And New Zealand dollar to American dollar. Finally, we have something that I've been waiting for some time. Downtrend flag. Flag is a trend continuation pattern. Flag ends with head and shoulder formation. Then we had a breakout. I thought we're gonna break the support straight away, but now we bounced from the lower line of the flag, but we came back above the neckline, but this created a false breakout opportunity, so that is why the price is advancing lower. And the same as happens on Aussie, that we are having 5 bearish days in a row. We are having 1, 2, 3, 4, 5 bearish days in a row on Kiwi as well. So sell signal is on the table right now. Why is that? We have a breakout of the neckline of this head and shoulder formation. We have a breakout of the lower line of the flag, which is a trend continuation pattern, and it suggests that the bearish trend will be continued. We have a breakout of this horizontal support, which was important, which was working in June, July, and November. And now the price advancing lower. We should reach this support, which is 200 pips lower. Maybe not this week, maybe not next one, but eventually we should get there. What we can see on hourly chart is that this pair drops like a rock. Maybe a small retracement to test this level, and then a downswing. Maybe it won't happen now, maybe it will happen later, maybe it won't be so deep, but correction is welcomed here. But keep in mind that in the same time we should see a stronger decline here, and we should reach this horizontal support. As I said, maybe not, well, definitely not this week, maybe not the last week of 2016, but eventually, maybe in January, we should get there. So it creates a nice long-term trading opportunity for some of the traders. Right, so we start this week with a very strong American dollar, which affects gold, silver, which affects most of the pairs. Euro dollar is declining, Australian dollar to American dollar is declining, cable is declining, gold, silver. Actually, yeah, we're just going now with the trend. As you can see, those movements are very technical, no surprises whatsoever. So, well, sometimes when you have a lack of news, it's good for the technical guys, because there are no surprises from the macro events, and they can focus, price can focus on the technical analysis and just go with the flow. Right, so sometimes it's good for the technical guys. Thank you very much for watching Daily Analytical Report. Remember to follow us on Twitter and our website alpari.news. Now half an hour break, and after that a webinar about basics of Forex market. Thanks very much and goodbye.